Hi, welcome to this short video about tax deduction at source, also known as withholding tax. This is Mr. Mukul. He wishes to pay Mr. Anil for some work done by him. He was ready to pay, but he stopped. He forgot that he had not done TDS. So, he does that, he keeps the tax deducted with him and pays the balance to Mr. Anil. Mr. Mukul then pays the tax deducted to the government. But Mr. Anil wants to now claim the balance payment. So he files his tax return with the government and then takes the refund or sets it off with his tax liability. But now imagine if you were Mr. Mukul. You may either be a professional or a businessman or a common man. If you either earned business income of 1 crore last year or you had professional receipts of rupees 50 lakhs last year, you would fall into a certain basket of people. Or you may not be an individual like Mr. Mukul, but a business entity such as a company or a partnership firm. Then also you fall into the same basket. This video covers TDS for professionals and business entities. Be sure to watch my next video on TDS for common man and personal TDS. Coming back, Mr. Mukul may use the services of many people in his business, such as contractors, professionals, lawyers, employees, etc. He receives an invoice for the services and pays them instantly or gives them to his accountant for recording into the accounts for future payment. Be it whichever case, you will be required to deduct tax and pay only the balance to your vendor if you are one of those business entities in basket A and you use those services and pay more than a specific sum of money. Now to actually deduct tax, he will need the PAN of Mr. Anil so he can pay to the income tax department specifically to the account of Mr. Anil that he holds with the department. That account is called PAN, permanent account number, and also acts as his identity. But what if Mr. Anil refuses to give his PAN? Does that mean Mr. Mukul should not deduct tax? No. If Mr. Anil does not furnish his PAN to Mr. Mukul, then he would be required to set aside a minimum of 20 rupees out of every 100 rupees payment that he makes or at a higher rate as required. Now Mr. Anil gets only 80 rupees and does not get 20 rupees because he has not submitted his PAN. Mr. Mukul cannot keep the 20 rupees with him, he pays it to the government. But more so, if you're an employee, ensure to submit your PAN and your last employment details to your current employer. Because if you don't give your PAN, your employer would deduct tax at nearly 50% of your salary, and you would only get this amount next year when you file your taxes, generally with some nominal amount of interest. The payment that you make is the income of the other person. Now, what if the payment that you make is exempt for the other person, say agriculture income? Then there is no requirement to withhold any amount of tax. For Mr. Mukul, it is important to note whether Mr. Anil is a resident or non-resident as per income tax law, or in place of Mr. Anil, an individual, the payment is being made to either a company or a partnership firm. This video covers only those payments made to residents. If you are an employer, deduct tax at the time of payroll processing only. So if you're an employee, you can be sure that your employer will deduct tax only at the time you get your salary message. In the same way, tax is also deducted at the time when your life insurance policy matures and you receive your money. This is also applicable in case of lottery or winnings. As a businessman, Mr. Mukul may pay interest, salary, rent, professional fees, contract work payment, or also commission. He may rarely pay lottery or winnings. When Mr. Mukul pays interest, he may pay it on any loan that he might have taken. But if Mr. Mukul is a company or a partnership firm and not an individual, it may pay interest on securities issued like debentures, or a partnership firm may pay interest on partnership capital. If you are paying to a resident, then generally as soon as you pay more than rupees 5000, deduct tax at 10%. If a bank pays interest, it generally deducts 10% if your interest is more than 40,000 rupees on a fixed deposit, which is roughly worth a OnePlus phone. Senior citizens get a benefit here. Banks only deduct 10% after interest crosses 50,000 rupees. For some extra information, that's the same 50,000 that is allowed as a deduction from your total income while calculating tax. So, at the end of the day, your loved one may not pay tax at all on that 50,000. Mr. Mukul gets business through an agent and pays commission for that. As soon as he pays more than 15,000 rupees to that agent, he is generally required to deduct tax at the rate of 5%. If Mr. Mukul were an LIC agent, then LIC would deduct tax at 5% while paying him more than 15,000 rupees as commission. Salaries are the most important expense Mr. Mukul pays because his employees are his most valuable assets. He has to deduct the tax which his employees have to pay on their total income. So, Mr. Mukul also asks them if they have made any payments that may reduce the amount of tax that he may have to deduct, like donations or mutual funds. But if an employee also has a provident fund account with his or her employer, the employer would deduct tax at 10% and pay the balance if the withdrawal is more than 50,000 rupees, half a lakh. Imagine this. Mr. Mukul rents out a workspace for an office in MG Road with a cool foosball table on rent for his awesome employees. Wow, what an office, right? Every month, Mr. Mukul pays rent for both the office and the foosball table. He deducts 2% of rent on the foosball table and 10% of rent for the office because he pays more than 2,40,000 every year for the office and the table separately. That's about 20,000 rupees a month. Mr. Mukul also gets his work done by giving out contracts to various vendors. Suppose he needs to transport some goods to his customer's place but does not have his own trucks or vehicles. He contacts a delivery service and gets his work done. Similarly, he may use many other contractors in that way. He should deduct 2% of the payment if he is paying more than 30,000 in one shot. Or also, if he's a regular customer to the vendor, his business is likely to cross 1 lakh in a year. If that vendor is an individual or an HUF, say Mr. Narayan or Narayan HUF instead of a Narayan Company Private Limited, then Mr. Mukul may deduct only 1%. A common service that businesses require is that of a professional. Mr. Mukul may use an advocate for his legal requirements. Or imagine if he uses a special business model that allows him to get huge business online. He may have to pay royalty to the owner of such patent. If suppose he was a company, the company would require to pay its directors fees as per the agreement. All those kinds of payments are covered under royalty fee for technical services. While paying more than 30,000 rupees of royalty or professional fees, there is generally a tax reduction of 10% that is applicable. Coming to the last income, winnings. I could totally answer those questions you thought to yourself while watching KBC. You are next on that hot seat, and depending upon your region, imagine your host is giving you a check. But as soon as the ad break begins, they take back the check and later give you a check for 70% of the amount, and you are heartbroken. So now you will know that any winnings for that matter, you only receive 70% of it if the winnings is more than 10,000. That brings us to the end of this video. Just a small disclaimer. Hi everyone, you know what to do if you like the video. Like it, share it with your non-CA friends, parents, relatives, everybody. And if you are a business looking for professional assistance, reach out to us in the email given below in the description. And also, as always, just a big thanks to all my friends and family. They have given me great ideas and awesome support. Thanks, and see you in the next one.